This is a stock analysis of Arista Networks, ticker symbol ANET. Cloud computing is a big deal. Nearly all applications are delivered via cloud services. It's a highly competitive field, but one worth looking into. The aging, in relative terms, data center networks are set up for server-to-client traffic. They need a solution for the heavy data traffic from server to server, which takes place in the cloud. And the enterprise campus networks need solutions to bottlenecks created by different platforms, operating systems, and so forth. That's where Arista Networks comes in. They provide a range of industry-leading 1 to 400 gigabyte Ethernet switches and routers, as well as their Extensible operating system, or EOS, and they are involved in some of the largest data center build-outs. That's the company we're going to be looking at today, so stick around. Arista Networks is headquartered in Santa Clara, California. According to their website, Arista Networks is the leader in building software-driven cloud networks for today's data center, cloud, and campus environments. They have a variety of products which would take just an incredible amount of time to accurately explain and look at. But I'll try to look briefly at the highlights and explain as we go. Now, as we go through this, a lot of people are going to wonder what cloud computing and virtualization are exactly, so I'll give you my best short explanation before we get started. Simply put, virtualization allows your computer to act as many computers. It splits the processor, memory, storage, and networking abilities of a computer into different compartments, making it possible to create virtual machines within one system. Then if there's a problem with one virtual machine, you have the ability not just to retrieve the information, but the whole computer, because it's just a file. Cloud computing allows you to access someone else's computer and programs via the internet, so you don't have to own a plethora of actual hardware or install a ton of programs and software. You simply sign up for a membership and access their facilities. Adobe is a great example of cloud-based products. In the description, I link to an article that better explains the differences between virtualization and the cloud. I'm no expert in this field, so the picture I have here is the Arista 7500R. They currently have a 7500R3, but I can't find very good pictures of them. These high-density spine platforms scale from 4 terabytes per second to 460 terabytes per second. I'll provide a link to their products in the description as well. They have spines, modular spline switches, data center switches, as well as dynamic and deep buffers. Arista's Extensible operating system, or EOS, which is at the core of their cloud networking platform, uses Linux, which is both free and one of the most reliable computer ecosystems on the planet. EOS is highly modular, which allows it to be self-healing, in that more than 100 separate processes, or what they call agents, each handle separate management functions. So each individual process can be restarted without interrupting the other individual processes. It sounds a lot like virtualization to me, and it's also programmable at all layers. Arista also provides applications that can be purchased separately, such as Arista's Data Analyzer, or DANS, which provides network data to security, troubleshooting, and performance management tools, and their Latency Loss Analyzer, or LANs, which provides access to internal network performance loads as well as packet loss and latency. Small units of data are called packets, and when some don't go where they are sent, it's called packet loss. This affects video, audio, and gaming the most because they rely on real-time packet processing. Arista also has network telemetry, which provides information regarding the state of the network. So for instance, things like hypervisors. Hypervisors are what create and run virtual machines. And network tracers, which provide integration and diagnostics for various workload conditions. EOS supports cloud and virtualization solutions like OpenStack, which is the most widely deployed open source cloud software in the world. It's used by companies like China Mobile, Walmart, and Blizzard Entertainment. It also supports Microsoft Systems Center, which is an end-to-end service management product, and VMware NXS, which is a virtual networking and security software. Another product Arista provides is Cloud Vision, which is a turnkey software solution that helps customers move to a more automated and cloud-like structure. With Cloud Vision, the EOS database model is expanded network-wide. It allows for simpler network-wide automation and analytics. It can be used across private, public, and hybrid clouds as well as wired and wireless campuses. And then there's cognitive Wi-Fi, which is all about providing a better Wi-Fi experience throughout a business. It looks like a system that troubleshoots Wi-Fi to make sure that it runs optimally throughout a business or maybe an office building. Arista Cognitive Wi-Fi is 6G. The whole world's talking about going to 5G and Arista's going to 6G. And 6G just stands for 6 gigahertz, which is the frequency that the Wi-Fi uses. And it's also backwards compatible, so you shouldn't have to buy all new gear. Arista is expecting large businesses to become early adopters due to the high initial cost, and then to have it filter down to the individual as the costs come down. 6G provides higher data rates and increased capacity. One of the investing specific applications for Arista's products would be high frequency trading architecture. So if you save your money, you could buy some of Arista's 7130 series switches for low latency trading. So let's look at the leadership. Jayshree Ulal was VP of Marketing at Crescendo Communications when it was acquired by Cisco Systems. She then joined Cisco and eventually became Senior VP of the data center, but left in 2008 to become the CEO of Arista. Along the way, she took the company from its IPO in 2014 to where it is today. Jayshree has a Bachelor of Science in Electrical Engineering and a Master's in Engineering Management, and was also named the world's best CEO in 2015 by Barron's. Andy Bechtolsheim is a bit of a serial entrepreneur, having co-founded Sun Microsystems. He then went on to co-found Kealia, which was acquired by Sun, and eventually went on to co-found Arista. He is currently the Chief Development Officer and Chairman. Kenneth Duda, another founder of the company, is the Chief Technology Officer and Senior VP of Software Engineering. He was the lead architect of Arista's EOS. I get the feeling that in the world of smart people, this guy is the genius. I can see the movie right now. The serial entrepreneur who founds a company with a genius. Maybe we'll make him some sort of a Rain Man type character. Then there's the woman. She's the glue that holds these two crazy guys together. Without her, they would just like fly off into orbit. Now we need a lead, someone who's really hip. Someone who can make this movie a little more street. There we go, I'm sending this to Netflix. Acquisitions. In 2018, Arista acquired Mojo Networks, a provider of cognitive Wi-Fi. They also acquired Metamaco Holdings, which specializes in solutions for latency-sensitive business applications. At the beginning of 2020, Arista's acquisition of Big Switch Inc. was completed for $73 million, plus another $6.6 million in restructuring and acquisition-related expenses. Big Switch is a network monitoring and software-defined networking pioneer. It's expected that Big Switch will help Arista expand their data center networking solutions and add to their data analyzer and CloudVision software. Share buybacks. Share buybacks are kind of an acquisition, aren't they? Arista bought 1,209 shares at an average price of $188.61 for a total of $227,000 in the second quarter of 2020. That doesn't seem like much to me considering they have $1 billion share buyback to get through and prices have been pretty low. Competitors and risks. Cisco Systems has historically been the largest player in the data center and campus networking markets. However, Arista has been steadily gaining market share while Cisco's dominance has fallen. Other competitors would be the Aruba Networks division of Hewlett-Packard, as well as Juniper Networks and Extreme Networks. To the extreme! Competition is fierce. Everyone is trying to get market share and stay ahead as far as innovation goes. Not being able to keep up with the rate of change technologically would be a huge problem for any one of these companies. And in that regard, research and development is incredibly important. One way these companies keep up is through acquisitions, and companies in this field are being gobbled up or consolidated all the time. If a company wants to enter a particular space, instead of starting from scratch, they can simply acquire a company that's already doing well in whatever field they want to enter. Or they can enter into a strategic partnership with a company that offers complementary services. How well Arista can compete in those areas is going to have a big impact on how they do in the future. Another big issue is intellectual property and patents. Cisco filed 2 lawsuits against Arista for intellectual property infringements back in 2014. A lot of employees at these companies come from other companies in the same field. So the potential for new employees to have some sort of inside knowledge is probably pretty big. In the end, Arista and Cisco called a truce, and Arista agreed to pay Cisco $400 million. A cool 400 mil. Another big issue is going to be the ability to gain and keep large customers. That'll be crucial. And that brings us to revenue. It can be sporadic. Sales to Microsoft and Facebook in fiscal 2019 accounted for 40% of revenue. But those sort of transactions won't be a yearly occurrence, and how often they'll occur I can't say. Arista is expecting their revenue to be on the weak side moving forward, but it's currently not that bad, especially when you consider that there's a global crisis going on which is impacting their supply lines. Their revenue for the first 2 quarters of 2020 isn't much different than it was for the first 2 quarters of 2018, but their share price is roughly where it was during the trade war. In a company like Arista, research and development is going to be high. That's just a given. 19% of revenue went towards R&D costs in 2019, and R&D costs are generally around 20% of revenue. Looking at the net income, you can see that it's not a smooth ride. But one of the reasons for that is going to be the large purchases made by Facebook and Microsoft. It seems like they may have negotiated a pretty good deal with one or both of those companies. But Arista is still very profitable, and it's important to note that Arista is still focused on growth and not profit at this point. And they've managed to be a profitable company since 2010. When it comes to cash on hand, Arista has been stockpiling just an incredible amount of cash. In the second quarter of 2020, they have $2.7 billion in cash just waiting to be put to work. Their total liabilities are $1.2 billion, so less than half of their cash would pay off all of their debts and liabilities, both current and long term. And they'd still have $1.5 billion left over. And don't forget they have a $1 billion stock repurchasing plan going on as well, but those purchases are done in very small amounts. And shareholder equity is just over $3 billion. Net margins fluctuate heavily, and that has to do to some degree with the individual deals that Arista can negotiate with their customers. In certain situations, Arista will negotiate a significant discount that will eat into their net margins. 2018 saw quite a drop in their net margins, and at one point they reached 12%. So even though their revenue may be pretty similar to 2018, their net margins, and by extension their net income, is on track to do quite a bit better, especially since they had negative earnings in the second quarter of 2018. Their net margins for the second quarter of 2020 are 30%. In 2018, when the China trade war was gripping the market, Arista's share price was $210 a share, and they were making $4 a share per quarter. This gave them a PE ratio of almost 52. Currently, their share price is $222, and their earnings per share on a quarterly basis is over $9. That's a PE of like 22 or 23. I don't know why it's so low. Maybe investors expect margins to fall, or they don't expect there to be that many large customers. I'm not sure what the deal is, but the PE ratio has been low since April 2019. And the share price hasn't been anywhere near its April 2019 highs. Even though Arista's name is synonymous with the cloud, they're selling hardware. However, Apple sells a lot of hardware, and Apple's prices skyrocketed since the China trade war. Arista seems undervalued to me at these prices. If you like what you saw, give me the thumbs up and subscribe. And don't forget what I told you.